So Donald Trump has now been confirmed as the next U.S. president. And the market reaction in the precious metals has been a sharp sell-off in the gold price and the silver price. But what's going on here? Why are the metals down today? Has the fundamental case for gold and silver changed? Well, not exactly, and we'll talk about it in today's video. So let's get to it. Did you know SD Bullion is giving away a monster box of 2024 Tree of Life silver coins? Sign up today at sdbullion.com/sweepstakes. Hey everybody, Smart Silver Stacker here. Hope you're doing well. So let's talk about the election news and the effect that it is having on the gold and the silver markets. Both metals down fairly sharply today. At the bottom of the sell-off, silver was down over 5%. At the time I'm recording this, the gold price down almost 3%. So what gives? Well, if we want to understand what's going on with the metals here, we can't examine them in a vacuum. We have to look at the entire market reaction to this news of Donald Trump's election. Let's start with the US dollar. So the US dollar, the DXY, up fairly significantly today, up over 105, catching a major bid on this news. Now, why is that? Well, it likely has to do with Trump's protectionist policies involving tariffs. Also, I think it's important to note that Donald Trump has made several statements to the effect that the loss of the dollar status as the world reserve currency would be akin to losing a war. And it is likely that Trump, as president, will move away from the dollar weaponization that we have witnessed under the current administration. The use of sanctions, the freezing of our geopolitical opponents' assets may very well be a thing of the past once Donald Trump is in office. But here's the thing about de-dollarization and the dollar. I think this is a bit like Pandora's box, and while de-dollarization and fears of weaponization may be diminished under a Trump administration, the cat's kind of out of the bag here. And nations around the world, the BRICS nations and others, very likely, while they might not be worried about sanctions as much under a Trump presidency, what about the next U.S. president and the one after that? So I do think that they will like to continue to diminish their dependency on the US dollar, and therefore this trade, this rallying in the DXY, which is a big part of why the metals are falling today, by the way, I think may be a temporary phenomenon. Also today, you are seeing a huge rally in Bitcoin, Bitcoin breaking out to new record all-time highs on the news of Donald Trump's election. Of course, he will be the crypto president. That's what we've heard. He wants to make the US the crypto capital of the world, and so I think that some funds are being diverted away from other assets and into Bitcoin and the other cryptocurrencies. You're also seeing a huge rally in the stock market today. Now, what is that about? Well, that, I believe, is on the anticipation of all the easy money that is about to be pumped into these markets. And so what you're seeing here is a deleveraging of fear trade assets like gold and silver and U.S. treasuries, which are selling off as well, and a big move into risk assets, into stocks and the stock market as a whole. And so that is also contributing to the decline in the precious metals. Investors are selling positions in the metals. And of course, they're not really selling physical gold and silver. They are liquidating paper positions in ETFs and futures contracts and rolling that capital into other assets like the stock market. Now, I mentioned the bond sell-off, but this is very interesting. We saw a huge spike in the 10-year yield and the yield of U.S. treasuries across the board on this news of Donald Trump's election. The 10-year yield rising by almost 4% following this news. That's a big move in the U.S. debt market. And again, this is a sell-off of perceived safe havens and a move into risk assets. Now, I want to talk about the U.S. debt crisis and the $36 trillion national debt, not to mention the $200 trillion plus unfunded liabilities that we are on the hook for here, and how that relates to this move that we are seeing in the bond market and what is ahead for the precious metals. So, for example, the yield on U.S. treasuries rising. This is very significant because this means that we are going to see an increased interest cost on the U.S. national debt, which already this year has moved above $1 trillion. And this is, I think, what we should be focusing on as precious metals investors, is the debt market and how this is going to play out over the next 4 years. So Trump has made a lot of promises regarding tax cuts, for one thing. And also, he has talked about, he paid some lip service to appointing Elon Musk and maybe even Ron Paul, I've heard some talk of, towards looking to eliminate government waste and reduce government spending. Now, I think he's going to make good on the promises to cut taxes. We saw the no taxes on tips, possibly even eliminating the U.S. federal income tax and replacing it with tariffs. And all of that is very good. I think that cutting taxes is great. However, I'm not very confident that the promises related to reducing government waste and spending are going to be met. And that is typically what we see. Everybody will be happy that their taxes are going down, but nobody is going to want their pet programs in government to be cut. And so I am not real confident that we are going to see a balanced budget or a reduction in spending. In fact, I think that what we're going to see is an absolute explosion in the U.S. deficit because the tax cuts are coming. So that will mean reduced revenue. I think the revenue is going to go down because you're going to see a lot of tax cuts here on the individual level, on the corporate level. And again, I'm in favor of all of that. But the problem is that if that is not combined with commensurate cuts to government spending, it just means that there's going to be a lot more borrowing going on. And there's really nothing that Donald Trump can do about the looming $36 trillion and growing U.S. debt crisis. But I guess I shouldn't say nothing, because there is one thing he can do about it, and that is encourage the Federal Reserve to reduce interest cost on that debt. So if you've got spiking interest costs on your debt, like we have right now, over $1 trillion, now the third largest item on the federal budget is the interest cost of the U.S. national debt. There's two things you can do, right? You can try to pay down the debt, balance your budget, be responsible fiscally, or you can use your central bank to drive down interest costs. Now, how do you do that? Well, bond yields, like anything else, respond to supply and demand, right? So when people are selling them, investors are selling off bonds, yields spike. Similarly, when investors or some other entity, like a central bank, for example, are buying up large amounts of bonds, well, the yield goes down. And so I suspect that what we are going to witness sometime over the next 4 years to counteract the runaway interest cost on the U.S. national debt, we will see a return to what's called quantitative easing, or buying of U.S. debt directly by the Federal Reserve, the central bank of the United States. Now, this is going to be great for corporations. This is going to be great for banks. And, that's another thing that we're witnessing today on this Donald Trump election news is bank stocks are soaring. And that's because they're going to thrive in an environment where interest rates are kept artificially low, and that's exactly where we're headed. But that also means that inflation is going to become a significant problem, and this is where the precious metals come in. Once the Fed returns to a policy of quantitative easing and Donald Trump implements low interest rate policies, it is going to inflate asset bubbles, certainly, and it will stimulate a lot of economic activity. But the other thing that we're going to be dealing with is much higher levels of inflation. And his tariffs policy may also contribute to higher prices, but the real problem here, inflation-wise, is going to be the printing of money by the central bank. So to me, the dip that we're seeing in the precious metals today is not related to any fundamental changes in the scenario for gold and silver. It is more likely a temporary phenomenon, and I will be viewing this as a buying opportunity. And I also want to point out that this correction that we're witnessing in the precious metals, it may go on for a little while here. We may see a pullback maybe to around the $29 to $30 level. I think that's about as low as we're going to get. If you look at the chart of silver, the most recent run up that we had to almost $35, if you plot a Fibonacci retracement over that run up, you would see that 29.60 is around the level of a 61.8% pullback, and that is actually what we witnessed during the last corrective phase of silver earlier this year. So I think that we might see some more buying opportunities coming up in the near future between now and the end of the year. But then once Trump is in office and he begins his low interest rate, easy money policies, you're going to see the U.S. economy kick into growth mode, certainly, and it will be beneficial in some ways. But expect the purchasing power of the dollar to decline and currency debasement to be the overall trend. So that's why I am still stacking. Feel free to let me a comment down below to let me know what you think about this analysis of the reaction of markets to Donald Trump's presidency. Thanks for watching, everybody. Stay safe and happy stacking, and I will catch you next time. Smart Silver Stacker, out.